For today's three-stock lunch, we thought we'd trade some names that did not make the cut this time around. And here with our trades is Brian Vendig. He is CIO of MJP Wealth Advisors. Brian, welcome. First up, we're going to go to AppLovin, the app monetization giant, on pace for its worst day in more than 2 years after getting snubbed by the S&P. Now, the shares have had an enormous run-up this year, as you see so far, up almost 800% through Friday's market close. Brian, what do you say here?
Well, Tyler, with that run-up, I mean, the forward PE on the stock is around 100 as we think about earnings going into next year. And also considering at the heart of the business, yes, it has a great AI tool that helps to support monetization of advertising. But at this point, I would say with the news that came out today and the pullback, it's a little too rich for me to jump in. So if you've been a long-time investor, for me, I would say it's time to cash in and wait for valuations to be a little bit more reasonable and look to the next generation of its AI tool and where it might be going next.
All right, so that's a sell on AppLovin.
Let's see about Trade Desk. The online ad firm lower, but still on pace for its best year since 2020, about an 87% gain. Would you jump in here?
Well, Kelly, another really interesting business. Again, monetization, advertising, giving purchasers the ability to choose. But when considering the fact that it's in a marketplace that there's such high competition, and now Amazon's jumping in to this type of business, and we're talking about the areas of online advertising that's outside of Alphabet's exposure, which is only about 40%. That's a long way of saying, I think I'd sell on this one as well and take profits from a really good year and a stock move overall.
All right, our final name this time around is Coinbase, lower for the second time in 3 sessions and on pace for its worst day in nearly a month. But the crypto sector has seen a huge boost since Election Day on bullishness for deregulation under President-elect Trump. The stock, Coinbase, up 63% since Election Day. Brian?
Well, Tyler, I do like those tailwinds, especially with a lot of the cabinet picks that the Trump administration has put out and also some of the commentary recently about where crypto could go as a means to back the U.S. dollar. And considering that Coinbase really generates majority of its revenues through trading activities, we know that as the word gets out, looking at this 50% move that we've recently seen since the election in just Bitcoin alone, I think it really provides a good opportunity for Coinbase to monetize moving forward, but also considering that the regulatory environment's changing and that they did have some issues there with the SEC, I think this might help. And then I would just keep an eye on the stock and look for great entry points from here.
Do you like the exchanges better than the cryptos themselves?
Well, that's a great question, Tyler. I mean, I think it depends on the investor, because my view is that it's still a speculative space. So I always, again, from a professional management point of view, look for a means to diversify. So I like investing more in the ecosystem than the tokens. But at the same point in time, with the backdrop of some of these macro opportunities, it should lift tokens, should lift the ecosystem higher if this deregulation and more acceptance of digital assets pervade into our financial system.
Let's talk a little bit about the broader markets and whether you think that they are, going to turn a little defensive as we move towards the end of the year, or what you expect as we turn into 2025 and a new administration.
Yeah, well, I like to quote Billy Joel on this one. You know, he had a song that talked about going to extremes, if you remember, Tyler. And I would say as long as those policy decisions from Washington and the Fed don't go to extremes, we should fall back on a good fundamental backdrop. Fed cutting rates maybe 2 or 3 times next year, slowing U.S. economy, slowing consumer spending. That should help to bring inflation and rates down. But I still really like earnings. And as long as those outlooks hold with increases greater than 10% year over year, I like the fact that there could be some participation outside of mega cap tech and helping to support these valuations. So I wouldn't give up on the market right now, but it's probably very easy to say volatility in Q1 as some of these policy pieces play out from our friends in Washington.
All right. Well, we'll see. Obviously, it's going to be an interesting time in the markets and across the country and around the world as we all adjust and get ready for a new administration. Brian Vendig, thank you. Appreciate it.